Chieh, and this is Bloomberg Technology. Coming up, Facebook's flawed fix for fighting misinformation. The social media giant could be forced to go back to the drawing board with less than 24 hours to go before the start of Silicon Valley's big week on Capitol Hill. Plus, the telecom deal to merge Sprint and T-Mobile could be placed on hold. We'll run through the sticking points that may force SoftBank to pull the plug and discuss the potential impact on the industry. And a leadership void at Samsung. The Korean giant is on track for another record quarter, but who's calling the shots? We'll update the search for a new chief executive. But first, to our lead. Facebook, Twitter, and Google's lawyers will be on Capitol Hill this week answering questions about Russian interference in the 2016 U.S. elections. But while Facebook's lawyers face lawmakers, the company continues to struggle in fighting fake news. At the moment, the social media giant outsources the process to third-party fact-checkers like Snopes and the Associated Press, among others. But Bloomberg has learned that partners say the process is too cumbersome and inefficient to make real headway in stopping fake news from spreading on its platform. Joining me now to discuss, Sarah Fryer, who's covering the story for Bloomberg and in D.C. this week to attend this week's hearings. Also with me, Bob O'Donnell, TECHnalysis Research President, and my guest host for the hour. So, Sarah, I'll start with you. Great piece today detailing how Facebook handles fake news and how that process has evolved. So talk to us about how today Facebook is handling this process.
So the process is still very human. They have a way for people to flag fake news on their website. Basically, if you see it in your news feed, you can flag it. If enough people flag a story as potentially false, it'll end up on a dashboard at these fact-checking partners' sites. And then they can look at this dashboard and link by link go through and click whether it's true or false. And then once they do that, if two different organizations mark something as false, then it gets a disputed tag put on it on Facebook. But there are so many duplicate links about the same false story. By the time you debunk one of them, it's appeared on 20 other websites. Fact checkers told me just how tedious this process can be and how they really feel like they're probably only scratching the surface in terms of the fake news that is out there.
So is Facebook reevaluating this process? I mean, what is Facebook's approach now?
Well, for Facebook, it's most important that they don't rush into a technical solution because they don't want to create a system that would be inherently biased. They don't want to be the arbiters of what is true or false. So Facebook is happy to have these fact checkers create patterns through the system. The more that they check, the more information goes into Facebook's databases about how stories are not fake, and then they can flag them more quickly. And basically, Facebook's main priority right now is speeding the process up because it can take up to 3 days for a story to get debunked in this process, which is just not fast enough for it to really make a dent in how people see and believe news.
And even so, Bob, if a story is debunked, research shows that it can actually have little effect on the people who've already read that story.
Absolutely. I mean, this process is clearly so broken, it does need to be thrown aside. Now, whether they're going to really do that is not likely. But the fact of the matter is they've got to think about themselves as a news conglomeration, right? I mean, that's essentially what it is. And instead of blacklisting the bad things, I think they have to really say, we got to whitelist the stuff that's okay. And I know that's a radically different perspective.
I know.
They tried that. I know. It's a fair point, Sarah, and you know, look, there's no great and easy way to deal with this. The fundamental issue is you can't expect the crowd to be an editor, right? People are editors because they've been trained, they know how to do that, and fundamentally they're asking people to try and be editors, and I don't see how that works.
Sarah, Facebook is saying this is just one prong of a multi-prong approach. What are the other prongs of the approach?
They are trying to do like news literacy programs around the country, around other countries as well. They're trying to think of ways to present information with more context, because one of the problems is on people's news feeds, they see stuff that their friends share, but they may not see things from, you know, another political perspective. So they're trying to think of ways to do that. it is a situation where they're going to have to try many of these things before they come up with something that is long-term effective, and it'll all be very resource intensive.
Bob, clearly from your facial expression there, that is not enough.
Well, no,
opinion.
I don't think it is at all. And I think they have to rethink how they structure the news on the page. Where does news from outside sources appear within your news feed as opposed to that information that everybody gets from their friends and what have you? So it's about restructuring, maybe trying things they have done in the past, but if you put content in different places, people are going to have to think about it in a different way. Because clearly, you can't teach everyone how to properly read the news. That's just not feasible.
Clearly. Sarah, you are walking into these hearings later this week. What are we expecting to hear?
The companies are going to come and explain how their systems work, first of all, because I think that they feel like, at least among political lawmakers, they may not understand how these systems are very difficult to screen for this kind of activity. And then they're going to try to explain that they've done a lot of work, and they're going to basically say that they are very intent on making sure that these problems don't occur in the future, and to trust them and build up a relationship and make it seem like they are very, very proactive, so that legislation doesn't come down in a very harmful manner. Now, some of them are open to legislation. Facebook has said that they are willing to work with regulators, but what shape or form that will take really depends on how these companies come through with these hearings.
Bob, is legislation the answer here? Is government intervention the answer?
I'm not sure the government intervention is the answer. But at the same time, I don't think it hurts to have some kind of mandates and some kind of controls in place about a little bit more transparency on the way the news is gathered and the sources that are provided, as well as the advertising, because we haven't even talked about that piece of it. That has a huge influence on this as well, and the organization of events and all these other things that have been recently reported that they've been driving.
All right, well, we will be covering these hearings all week long. Bob O'Donnell of TECHnalysis, you're sticking with me for the hour. Sarah Fryer is in Washington for us this week. Sarah, I know we will be checking in with you regularly. Thanks so much for stopping by. Well, another day, another record for Bitcoin, the leading cryptocurrency, which has surged past $6,000 earlier this month, now has a market cap of over $1 billion. Bitcoin's total value is just over $100 billion, meaning it makes up more than half of the overall cryptocurrency market. It is well ahead of the closest rival, Ethereum, which has a market cap of around $29 billion. Cryptocurrency prices have been unfazed by recent regulatory crackdowns and skepticism from Wall Street stalwarts like Warren Buffett and JP Morgan CEO Jamie Dimon. Coming up, a stellar earnings season for tech companies helping push the market higher. We'll break down the highlights next. And Bloomberg Tech is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. It was another successful launch for SpaceX. Elon Musk's space exploration company's 16th rocket launch of the year carried a South Korean commercial satellite into space. The satellite launched from Florida's Kennedy Space Center will replace an existing orbiter for KT-SAT. The launch rocket landed successfully for reuse on a future mission. Well, about half the companies in the S&P 500 have already reported earnings results for the last quarter, and tech has been the standout. Amazon stock is hovering at a record high and trading above $1,000 a share on its stellar results. Plus, Apple and Facebook are also trading at record levels ahead of its earnings release this week. Bob O'Donnell, president of TECHnalysis Research, still here as our guest host for the hour. What do you make, Bob, of the Amazon running away with the show?
Well, the Amazon numbers were incredible. I mean, because everybody expected, because this is Q3 when they're building up their warehouses in preparation for the holidays, that they were going to take a bit of a hit, and yet even saw modest profitability in the retail side of things. And then, of course, AWS continues to kill it for them. And you've got all the these other interesting businesses they're starting to build up. I mean, fundamentally, the thing about Amazon is they really want to drive people towards Prime and other services. That's what they're all about. And so they're doing all these interesting things. They threw out their Key service, which is obviously a little little controversial, but interesting in terms of trying to address a problem that some people have. And yet another way to say, look, here are all the different kinds of services we're going to be able to bring to you. And once they can get people hooked on all those services and getting that recurring revenue, that's much better than the hit and miss of holiday season versus what have you.
One analysis of recent earnings calls by Bloomberg showed that U.S. corporate leaders are more worried about Amazon and what it's doing to their business than any other factor, including the chaos in Washington. I mean, obviously, other retailers, it makes sense that they'd be worried about Amazon, but what about all of these other businesses that Amazon could possibly disrupt? Who should feel threatened?
Well, I mean, obviously the logistics companies. Amazon's building their own logistics systems. Then you've got to worry. You've got the pharmacies potentially. Now they've just got some approval to deals on not drugs, but prescriptions.
Prescription drugs.
Thank you. Obviously, groceries with Whole Foods. So I mean, they are really extending their reach. Content, delivery, all of these kinds of services, almost everything that people kind of pay for on a regular basis, they're going after.
So looking ahead, later this week, we've got Apple coming up. I know this is your bread and butter. You know, we've been talking about what's happening with the iPhone 10 and the iPhone 8. We're not going to see any of that yet in this quarter.
No.
What are you looking for?
Well, I mean, the big number that everybody's looking for is going to be the calendar Q4 forecast, because that's going to give us the first hint of what we can expect on iPhone 10 demand. So right now everybody's talking about the fact that, oh, it's 5 to 6 weeks, that's great demand. Well, it's either great demand or short supply, or realistically a little bit of both.
Right.
Which is probably what it's going to be there. So, you know, and the iPhone 8 story is not going to play itself out much in this last quarter, maybe a little bit, but everybody seems to have written it off. I mean, you know, the weird thing is, all of a sudden the market's decided, oh, we're going to think 3 quarters ahead for Apple. They never do that. So all of a sudden now it's okay. I don't quite understand why they're doing that, but hey.
Do you think the iPhone 8 could see a bump in demand once users are able to see the phones, both the phones in their hand, and they can say, do I really want to pay $300 more for this or not? Maybe I'll just go with the iPhone 8?
Actually,
or unlikely?
I don't think so. And the reason is, the people who see the 8 and go, oh, this is nice, I still think are going to gravitate back down to the 7 and the 6S, which we've started to see because it's much less expensive. Because the thing we still haven't seen with the iPhone 10 is, once all the Apple fans spend their $1,000 on the phone, and then we get to regular people, I'm not convinced that they're all going to go, oh yeah, $1,000, no problem. Instead, I think they're going to go back and look at the 8 and go, 6 and 7, not so bad, because I'm sitting on a 5 or even an older phone. So yes, I'm going to upgrade. So I don't know. I mean, you know, this first round Apple could have charged $2,000 and people would have signed up for it. But next year it'll be different.
Any concerns about the facial recognition technology and some of the reporting?
You know, there's like 1 or 2 reviews out there saying it's not clear. It's way too early to say, right? And 1 phone, 1 person, or 1 or 2 people. Too early to tell. Obviously, it needs to work, but we'll see what happens.
Okay, last quick question. Facebook also coming up. I mean, obviously, Facebook's got some big stories to deal with this week, but it also happens to be their earnings call on November 1st.
Yeah, I mean, I think Facebook's going to be just fine this time around. They're continuing to show that the reach of their influence is extending. Therefore, I think from a financial perspective, I think we'll be just fine. The longer term question is, will there be regulations applied? Do they have to be thought of more as a media company? Therefore, there'll be more regulations on how ads come in? Will that slow down the rate of growth on programmatic advertising and all these other things that they do that the traditional media companies can't get away with?
All right, Bob O'Donnell of TECHnalysis, you are sticking with me for the hour. Coming up, are tech companies getting so big that the government needs to step in? We'll find out what the CEO of one of Amazon's competitors thinks. Next, this is Bloomberg. GoPro has tapped one big name in sports to serve on its board. The company has named Golden State Warriors president Rick Welts to the board, saying his leadership, creativity, and passion have made him one of the most respected individuals in the NBA. The Warriors were one of the first pilot partners to try the GoPro Fusion, its device for virtual reality video. Welts will be GoPro's 8th board member. Well, while lawyers for Facebook, Google, and Twitter will appear on Capitol Hill tomorrow to answer questions about Russian meddling in the U.S. presidential election, one company that will not be there is Amazon. But increasing scrutiny of the tech industry in Washington could raise antitrust questions for the e-commerce giant. Box CEO Chieh Huang spoke with Bloomberg earlier on whether there needs to be more regulatory oversight of big tech firms. Take a listen.
I do think so, to a certain extent, right? I think as you're looking at kind of the position of Amazon, for example, the fact that they can just put a simple press release out there or file a simple trademark application and have an entire market react with billions of market cap loss, I think there's something to that. And whether that needs to be corrected by the market sentiment in general, whether most folks in the market will eventually just see, oh, you know, that's more bark than bite, yes, or whether that's a legislative action, we'll see in the future.
Do you see any kind of evidence that a company like Amazon is engaging in anti-competitive behavior?
I don't see, outside of potentially what they've done in the past with some of their acquisitions, and it's well documented in Brad's book, The Everything Store, in terms of kind of their past acquisition practices. Mm-hmm. But in general, currently now, it's really a conundrum, because what you would say is that they try to lower prices, they try to inject more competition into the marketplace, yet they have an ability to move markets solely by themselves. So right now in a vacuum, potentially no, but when you look at the swirl of events and their MO kind of in the past and now, TBD. Right,
and right now, in fact, about 55% of all product searches began on Amazon, which has surpassed Google. Yep. That's been something that's brought a lot of attention, unwanted attention on Amazon. How do you raise your company's profile, Box profile, in this kind of environment when Amazon dominates? What's really interesting is that, yes, they are dominant, but there's still some market share left for the rest of us, especially in places like B2B. And so for us, Box, we ship toilet paper, large format only, anywhere in the U.S. But the reality is a big part of our business is actually business to business. So take, for example, the green room here at Bloomberg, or down in the beautiful atrium here. There's just hundreds of different snacks for everyone here to eat and to enjoy. Certainly the folks who stock that pantry aren't going on Amazon and clicking like Skinny Pop chips like 400 times, you know. And so I think for us, it's really finding those niches where Amazon is not as strong and really going after it.
You know, it's interesting. I read something that you'd said about actually some of your best customers in what you called the breadbasket regions of America, yep, populations with 50,000 people, maybe even less at times too. Just to go back to exactly what you were saying there, do you think they're insulated from the likes of Amazon because logistically they don't really care about going to those regions?
To a certain extent, but to your guys' point before, it just offers more opportunity for folks like us, because there is quite a lot of opportunity out there, whether it's here in the cities or especially out in those rural areas that you mentioned. Because you look at our business, for example, there's 30 million folks in the U.S. that don't live within 30 minutes drive of a Costco. Yeah. And so those folks, it's whether they like Costco or not, it doesn't even matter, because though the brand is ubiquitous, the locations are not. And so that's how, Scarlett, to your point, that's how we've been able to grow so quickly. We went from $40,000 in sales in 2013 in my garage, and last year trailing cleared over 9 figures in about a 36-month span. So absolutely there's opportunity, but can't take your eye off Amazon.
Chieh, you borrowed a lot from Amazon when you built out your company, Box. What do you think you do better than Amazon now as a result? What have you adapted better at?
It's interesting. So I feel like we have this really good ability to focus on our customer. And so our customer wants wholesale, right? And it's really difficult because Amazon is the everything store and they want to be everything for everyone. And so for us as entrepreneurs, it's really tough when you get a single person living in a 300 square foot apartment in the Upper East Side and says, you know, Box isn't for me. For us to really admit that it isn't for you and that it's solely for large families and for folks who want to stock up on something, that's been really difficult for us to concentrate on. But I feel like we do wholesale better than Amazon, partly because as a wholesaler, we can sell different items and different pack sizes that Amazon usually can't get their hands on.
You know, I wanted to ask you about automation you have to be really quick because we're running out of time, but you've automated your warehouses and actually not lost any employees as a result. Is that sustainable if you scale that up?
I think it is sustainable. I think the reality is folks will need to be able to kind of work with those robotics in order to keep those positions. So for us, we didn't go and lay off anyone solely because of automation.
But you retrained.
We retrained them, and now we feel like their ability to have earning power over the career is a lot better.
Bakkt CEO Chieh Huang there earlier on Bloomberg Television. Well, the future of Sprint, T-Mobile, and a merger may be in peril. We'll get the latest on the talks and examine whether the deal will be shelved indefinitely. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg.
% of the S&P 500 members, MACDs, are signaling
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. The White House is distancing itself today from former Trump campaign chair Paul Manafort, who was indicted.
There's no intention or plan to make any changes in regards to special counsel. But look, today's announcement has nothing to do with the president, has nothing to do with the president's campaign or campaign activity. The real collusion scandal, as we've said several times before, has everything to do with the Clinton campaign, Fusion GPS, and Russia.
Manafort pleaded not guilty. Prosecutors want bail set at $10 million. The open enrollment period for Obamacare begins Wednesday. That's after the Trump administration scaled back the law. The enrollment period ends December 15th, a sign-up period 6 weeks shorter than last year's. The administration's also slashing advertising and limiting funding for counselors and canceling a subsidy that lowers consumer costs, which will raise premiums. Kenya's election commission says President Uhuru Kenyatta won last week's rerun election. It was boycotted by the main opposition group. Officials say Kenyatta got 98% of the votes that were cast. And China says the U.S. must not interfere with ongoing negotiations to establish an official code of conduct in the disputed South China Sea. The country's ambassador to the U.S. says Washington has no territorial claim in those waters. Now, President Trump leaves this week on a 5-nation trip to Asia. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. here in Washington, D.C., 8:30 now, Tuesday morning in Sydney. We are joined by Bloomberg's Paul Allen, who has a look at the markets. Paul, good morning to you.
Good morning, Elisa. Well, trading's been underway in New Zealand for about 30 minutes this Tuesday, and the NZX showing a little strength in these early moments, up 0.1% right now, despite US equities closing a little weaker. We've got Nikkei futures pointing down, however. Plenty of action in Japan today. Bank of Japan holds its policy meeting, but no change expected there. The jobless rate is out for September in Japan, expected to hold steady at 2.8%, while industrial production is expected to contract 1.6%. Here in Australia, ASX futures are looking flat. Iron ore slipped about 2.2% overnight, now below $60 per tonne, and this is after local authorities in China ordered a complete halt to some pelletizing and sintering facilities. And the big one today, Samsung third quarter earnings. We'll be watching for profit and share price nearing record highs. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
SoftBank's talks to merge Sprint with T-Mobile have hit a serious snag and could throw the deal into jeopardy. That's according to Bloomberg News sources. Shares of both companies tumbled 9% and 5% respectively. In the last 3 days, the companies have been unable to get past differences over valuation. And Nikkei reported Monday that SoftBank will propose ending the talks as early as Tuesday. Still with us, our guest host, Bob O'Donnell, president of TECHnalysis Research. Joining us now as well, our Bloomberg News deal reporter, Alex Sherman in New York. And from LA, our Bloomberg News editor, Creighton Harrison, who covers telcos. So, Creighton, I'll start with you. Set the lay of the land. What is happening right now?
Wow. Well, everything's happening and nothing's happening at the same time, I guess. You know, these deal talks have been going on for months and have had all sorts of discussions about valuation and who's going to control the combined company, et cetera, et cetera. The whole point of this exercise has been to take the number 3 carrier, T-Mobile, and the number 4 carrier, Sprint, and put them together to create a bigger third competitor against AT&T and Verizon. So it would take the market from 4 carriers to 3 in the U.S., which would be a really big deal for everybody involved. And it would provide a resolution for SoftBank, Sprint's owner, the Japanese company run by Masayoshi Son, who's been kind of looking for a way to address the kind of long-term problems that Sprint has, because it continues to lose money and hasn't done that great with subscribers. It's had a couple of gains relatively recently, but over the long haul has not done so great. So this was supposed to be sort of the final resolution of his investment in the U.S. Now everything's up in the air.
So these talks have been going on for months. Talks of a potential deal, however, have been going on for years. Alex, talk to us about what's happening in this particular situation right now. What are the major snags?
So the valuation question that Creighton mentioned has been a potential obstacle for a while, really since these two sides started to get in earnest discussions about actually hammering out a deal in early September. Since then, both sides have been doing due diligence on each other, and sources around Deutsche Telekom have told me consistently that valuation may be an issue, particularly around this time, because we have really hit sort of the end point here before a deal was going to get announced. We have reported several times that the sides got close to a deal and then had delayed them. So initially they were trying to get a deal done when the companies reported earnings, and we reported that that was going to be pushed off to mid-November. Now the idea that talks may have hit a snag indicates that it is possible Deutsche Telekom was simply asking for too low of a price, meaning that the exchange rate, how many shares Deutsche Telekom would pay to SoftBank in order to, or I should say T-Mobile, in fact, pay to Sprint, since that's where the merger was going to happen. T-Mobile and Sprint merging as equals would be too low. In other words, they would want to pay too little amount of money per share of Sprint. So that may be the snag that we're talking about here, where SoftBank may have said, you know what, if you're pushing for that low of a price for Sprint, we're just not going to do this deal. We may know more details about that in the coming days.
Alex, this is Bob O'Donnell with TECHnalysis Research. You know, one of the big questions on the valuation of telcos these days is around spectrum. And both Sprint and T-Mo recently have been getting some interesting pieces of spectrum looking ahead to 5G. Do you think that has anything to do with this?
Well, that was sort of the fundamental reason to pursue a deal at all here. I mean, if you look at Sprint in today's iteration, there's no real reason why T-Mobile would want to merge with Sprint. As Creighton mentioned, it's been a money-losing entity for years, and it continues to struggle. But the theory here was that T-Mobile could use Sprint's customers and more, even more than that, its spectrum for a 5G world. So that logic hasn't really gone out the window here. It's just that if these two sides can't meet on valuation, they could, in fact, pursue other routes. But it doesn't change the big strategic picture that putting these two companies together would, in fact, make them stronger in a 5G world against AT&T and Verizon if, in fact, that deal was allowed by regulators.
So, Creighton, let's say a deal doesn't happen. What does that mean?
Yeah, that's the next question. I mean, so first off, you have T-Mobile, who's had a great run You know, they've been gaining subscribers for years now under John Legere. The profits have continued to, the profit margins continue to expand. Everything's kind of going right for them. And that's why Deutsche Telekom is always acting like they've had a position of strength in these talks. That they should be the ones to control the company. That they don't need to pay a premium to Sprint because their company is doing better. There's no reason really to think that wouldn't continue. And in terms of spectrum, they have what they need at least for the near future. Now, far future, who knows? But you know, and as we get more into 5G and there's more and more demand for various services, that's why they would like to have more spectrum in a Sprint deal, and of course more subscribers and more kind of market share. For Sprint, though, that's where the big question comes up. You know, is SoftBank going to put a whole bunch more money into Sprint to develop the network? That'd be a question I'd be asking if I was a SoftBank shareholder. Sprint has basically cut off its capex for the last few years. It has not been investing much in its network.
Right.
Now, it says it's been doing all sorts of things to kind of, you know, all sorts of innovations to make its network work better. But, you know, bottom line, it's going to have to play some catch up.
So, Alex, last question. What happens next?
That's a great question, Emily. It is a little hard to believe, from my perspective, that Sprint and T-Mobile would have gotten this close to a deal, only to have SoftBank pull back and get cold feet about issues of control. It just seems sort of illogical. Like, why would you have gone this far? These companies have been thinking about this for months and months. So is it possible that this is all sort of a big negotiation strategy once more from SoftBank to get T-Mobile to budge a little bit? Yes, but if, as the Nikkei is reporting, SoftBank comes out tomorrow or even today, Japan time, and says, we are pulling back publicly, that's a big step to walk back from. So you'd have to imagine that at least the discussions would be put on hold for the near future if SoftBank does in fact say that.
All right, Alex Sherman, Creighton Harrison, I know you guys will keep us posted. Our Bloomberg News team working on this story. Bob O'Donnell of TECHnalysis, you are sticking with me. And sticking with deal news, CenturyLink has cleared the last hurdle to buy Level 3 Communications, sending shares of both companies higher in the session. The Federal Communications Commission approved the $34 billion cash and stock deal, which will create a bigger competitor to AT&T in the business internet market. Coming up, Square targets larger merchants with its latest product. But can this foray into hardware be a game changer? This is Bloomberg. Square unveiled a countertop hardware register in an attempt to attract larger merchants. The new Square register includes a customer-facing screen for buyers to see what they're purchasing, Ethernet, Wi-Fi, and acceptance of all payment types. Square has been aiming to attract larger customers with a suite of services like loans and inventory management software. Still with us, my guest host for the hour and president of TECHnalysis Research, Bob O'Donnell, and from New York, Selena Huang, who attended today's Square event for Bloomberg Technology. So first of all, Selena, you got a chance to speak with CEO Jack Dorsey. What did he have to say?
I did. It was one of his rare appearances in New York, and for him, he really sees this as a game changer, something that's really going to be a reason for large sellers to have no excuse to join Square. They no longer have to rely on an iPad and turn that into a point-of-sale register. Now Square is offering an out-of-the-box package that provides a countertop register, a front-facing customer, a screen, as well as all of their software already integrated to it. He said that a big pain point of many of their large sellers was that they had to use kind of an unprofessional consumer device, the iPad, and have to constantly update it and integrate that with Square software, where in this way it just comes straight out of the box.
So, Bob, you've worked with a number of these point-of-sale companies. How do you see Square fitting into the larger competitive environment?
Well, I think it's a nice option, and as Selena pointed out, and as you mentioned, you know, the addition of all the services is what a lot of these small retailers want. So you've had the big cash register companies, the NECs of the world, as even the Dells and HPs of the world that have done these point-of-sale terminals in the big malls. If you go into Gap stores and places like that, for years they had that kind of stuff. So this this is a nice entry for Square to get into that, because it is more about the services and the ability to be able to do that. And yeah, it's a minor convenience to have both screens available, but an important step for them. It allows them to open the door, I think, to these other services, because they're not going to make a lot of money on that hardware.
How does this fit, Selena, into the larger vision that Square has, you know, the loan business, Square Capital as well?
Definitely. As Bob mentioned, this is not going to be a significant revenue driver for Square. Part of all of their vision has been to serve hardware up really cheap, hook them into their system, and provide them all of these software services. And something that Jack said again today, he said over and over again, is that they want to grow with their sellers. So they started with that smartphone dongle for the tiny food truck, the tiny one-person seller. But as that seller grows to multi-locations, multi-country, Square wants to be there the entire way. So as a company has developed, so have their sellers. And this fits in really nicely into their loan business, which also helps Square grow. They recently applied for an industrial loan charger, which would be a big deal for their Square Capital business and would help reduce their costs there. But like Bob said, this isn't going to necessarily mean that they're going to all of a sudden take business away from the big players like Verifone and Ingenico, but it's a great product to upsell their existing seller base to.
Selena, you know, having spoken with Jack Dorsey earlier today, obviously this is a big week for Twitter. The company will be testifying on Capitol Hill later this week. Did he have anything to say about that?
That's a great point. I said, you know, just tomorrow your other company is going to be testifying, and he was very reticent to say anything specific, but he said he's flying straight back to San Francisco. He's feeling great. He said the company is recognizing what they control and they're working on improving it, and it's quite a contrast to Facebook, where Mark Zuckerberg and Sheryl Sandberg have both been on the phone with people in Congress. Sheryl Sandberg even made a trip out there. Jack, on the other hand, at least on the surface, seemed cool as a cucumber, but we'll have to see.
So when will we see this new Square hardware rolling out?
Well, it's actually already working in some stores. I actually grabbed coffee to test it out at one of their locations in downtown New York. It works very simply, very easily. It's the first time that they're really providing this whole set, and it's this kind of dark Apple-esque looking, very simple device. I talked to their head of product who said that they've been working on this for a very long time to make it look as beautiful as possible.
All right, Selena Huang, Bloomberg Tech, thanks so much for sharing that update. Bob O'Donnell, you are sticking with me. All right, coming up, the show that helped establish Netflix's original programming, House of Cards, is coming to an end after season 6. This, according to a person with knowledge of the matter. House of Cards was Netflix's first original hit series, drawing millions of viewers to the streaming video service and spurring the company to produce dozens of other shows. The decision coincides, but is unrelated to an allegation that Spacey made a sexual advance toward a 14-year-old many years ago. Spacey has apologized for the behavior, and he said he doesn't remember it. Coming up, a huge leadership shakeup could be in store for Samsung after what's already been a tumultuous year. We'll explore the top candidates to take over the company next. And happening now, after another dramatic day in Washington, President Trump and the First Lady are participating in Halloween festivities at the White House. There they are, passing out candy. Nintendo's earnings got a big boost from its Switch console. The company reported profit of 23.8 billion yen, coming in better than expected. Nintendo also boosted its annual forecast after production of the hybrid console accelerated and customers bought more games than anticipated. The company now predicts it will sell 14 million Switch units in the period. Samsung is gearing up to report earnings on Tuesday, and it's forecasting another record quarter. But there is one issue that investors are hoping Samsung will address: filling the top job at the tech giant. Stephen Engel with Bloomberg News joins us now from Hong Kong to give us details on who is in the running for Samsung CEO. Still with me in San Francisco, Bob O'Donnell of TECHnalysis. So, Stephen, first of all, walk us through the potential candidates here.
Yeah, this could be a real turning point for Samsung, of course, which has been run by the elder statesman for many decades. And, of course, his son, the co-chairman, J.Y. Lee, is now behind bars as he is, of course, appealing this 5-year sentence for various bribery charges. So there's a long list of potential candidates, and it will really give us an indication of the type of generational change that Samsung says it wants to do because, of course, the current CEO stepping down after the preliminary numbers came out just a couple of weeks ago. Kwon Oh-hoon stepping down, saying the company and the conglomerate needs young leadership as it goes through this unprecedented crisis. You're seeing some of the names here. I can run through them pretty quickly. Kim Ki-nam, he is the president of the most profitable division, the memory chips and semiconductors. He is 59 years old, a lifer at Samsung, and really spearheading their push into the next generation DRAM chips. But also his protege is a candidate as well in the same division. That is Jin Gyo-young. He is a semiconductor engineer, core member of Kim's semiconductor team. He's Stanford educated, a foremost expert on DRAMs, of course, the biggest contributor to profit. And then there's a few others. There's the other two co-CEOs. Shin Jong-kyun, he's of the handset and network division. He's a little bit older, 61. And also Yoon Buk-hyun, 64, the number 3 ranking of the 3 CEOs. Keep in mind, they have a 3 CEO tiered system, and they could bring somebody else from another minor division as well.
Stephen, what about a long shot? I mean, J.Y. Lee's sister, is she at all in contention here?
Well, that's going to be the interesting question. She would probably be considered a long shot, given the dynastic troubles, if you will, at Samsung. But she's not out of the question because Samsung has been doing this for years. They promote from within and within the family as well. You're talking about Lee Bu-jin. She is J.Y. Lee's sister. She runs the Shilla Hotel Group, so she has management experience. She's highly ambitious. She's very charismatic, like her father. So she's not out of the question, but I would say she's probably a long shot given the crisis that Samsung is going through right now.
Now, Bob, Samsung reporting earnings tomorrow. Have you seen any evidence that these leadership, I mean, really dramatic leadership issues, to be honest, have affected the company?
No,
and the bottom line?
No, not in the least. I mean, the way Samsung is structured is this extraordinarily complex combination of companies. And it's because of that, it's very difficult for one change to really dramatically shift things. At the same time, it's very well respected within the organization. So whoever comes into this role is going to have to be really good, not only knowing all these businesses, but at herding all these businesses, because they are very distinct and run very differently, even under the brand of just Samsung Electronics itself.
So, Stephen, when are we expecting an actual decision here?
Well, we could get it, of course. This is going to be later today when they break out their further results, and we're going to get peppered. I'm sure the senior leadership is going to get peppered by analysts and journalists about the hierarchical or the succession planning, which has been in disarray throughout this J.Y. Lee camp or crisis, if you will. Keep your eyes on one in particular person, Jun Dong-soo. He's been known as the digital evangelist at Samsung, and he, for years, has been campaigning against or easing this hierarchical structure at Samsung. So he could be one that could rise to the forefront, even though he would not necessarily on paper be considered a frontrunner. He is heading up the medical device unit, but he has a very high profile. He could be that one person who herds all these divisions.
All right, Stephen Engel, I know you'll be covering that for us. Thanks so much. Yep. Bloomberg Stephen Engel there in Hong Kong, and Bob O'Donnell, president of TECHnalysis. Thank you, as always, for staying with us throughout the show. Great to have you. Finally, Android's emojis are under fire for not being exactly accurate. When you compare Apple's styling of a cheeseburger to Android's, you can see the latter put the melted cheese on the bun underneath the patty. Wait, who does that? Call it Burgergate. Also called into question, Android's illustration of a beer stein, which leaves a large gap between the foaming top and the beer. CEO Sundar Pichai took to Twitter saying, quote, "We'll drop everything else we are doing and address on Monday if folks can agree on the correct way to do it." The cheese goes on top.
Of course.
That's all I have to say. The cheese goes on top. Okay, that does it for this edition of Bloomberg Technology. A reminder, we are live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.